and a warm welcome back to the LLF Let's Learn Futures webinar series. We are delighted to have you here with us today. And before we start, please confirm that you can hear me loud and clear by typing yes or sharing an emoticon in the chat box so that I know you are able to hear me clearly. Great. Now, our topic for today is decoding palm oil price movement, the 5 catalysts behind them, which I believe this is something new and interesting to you. This LLF webinar series is proudly brought to you by Bursa Malaysia in collaboration with our company, Excellent. I'm CY Saw. I will be the moderator for today's session. We are privileged to have Dr. Satya with us today to share with us this informative session. I understand that many of you are curious to know about what are the 5 catalysts behind that drive the palm oil price movement, right? Therefore, our topic today will revolve around this aspect where Dr. Satya will elaborate further on this topic in greater details. I hope you find this session enriching and informative. And I noticed some of you just entered this webinar room. Before we begin, a final quick check, audio check. Please type in a 1 or thumbs up to confirm that you can hear me clearly. And if needed, please adjust your volume settings to ensure optimal sound quality. And to ensure you can enjoy the smoothest and highest quality video experience on your side, I highly suggest that you turn off your video camera during the session, as this will help ensure that everyone can enjoy uninterrupted video and audio and have an optimal learning experience. Our session for today will be divided into 2 parts. The first hour from 8:30 until 9:30 will be presented by Dr. Satya. Following that, we will be opening up a Q&A session where you can ask questions related to today's webinar. To ensure that we can address your questions, please type your question in the Q&A box and send them to all co-hosts, as this will allow me to directly assess your question easily. Please note that due to the volume of message in the chat box, it may be challenging to spot your questions if you do not send your question in the Q&A box. And along the way, if you have any question, you can type your question in the Q&A box as well. As this LLF Let's Learn Futures webinar series is brought to you by Bursa Malaysia, we have exciting upcoming topics and more to come. Every Tuesday, we will be having this LLF webinar that will be conducted in 3 languages, English, Malay, and Mandarin. So if you are currently just only trading the stock market or just started trading the Malaysia futures market, this LLF webinar is definitely right for you, where our panel of speakers will be sharing with you insightful knowledge and practical strategies related to futures trading. There are still more content-packed and informative topics lining up, and we will be adding to our list accordingly. So if you're interested in any topics and want to improve your knowledge and skills on futures trading, you can scan this QR code, register yourself, and make sure to add into your calendar so you don't miss any of these sessions. Besides the LLF webinar, we also have the LLF online workshop. Now, this online workshop is different from webinar, as this online workshop is for those who are serious in getting started in futures trading. In these workshops, we will be covering the full set of beginner knowledge in futures trading that are essential for you. It's a step-by-step guide to enable you to kickstart your first futures contract. Each session is 3 hours. So if you're still very new in futures trading or would like to learn more about what is futures trading all about, quickly register yourself in this online workshop. It's entirely free and fully sponsored by Bursa Malaysia. It's only limited to the first 50 online attendees, so grab your seat fast because this workshop is right for you if you want to kickstart your futures trading. Before we begin, it's my pleasure to introduce our speaker for today, Dr. Satya, the Managing Editor of Palm Oil Analytics, which is a price reporting agency covering daily price news and data based in Singapore. Earlier on this year, Palm Oil Analytics achieved a significant milestone from acquisition by Fast Markets. Dr. Satya has been in the commodity information business for over 20 years. Besides that, he also served as an economic advisor to the Malaysia Palm Oil Board, which is the MPOB. He's also a regular speaker at palm oil conferences. So without further ado, I'm delighted to hand over the presentation to Dr. Satya. Dr. Satya, there you go.
For your introduction, and thank you very much to Excel Learn for organizing this event and inviting me for the second time to speak at this online webinar series. I'm very happy to take part. And good evening to all of you, friends, colleagues who have joined far and near and on this seminar. So I am going to be speaking about uh, palm oil price movement and also focus on what's driving palm prices now and also what is going to drive palm prices in the year 2024. So we're not very far. We're just in the last quarter of this year. So I will cover overview of palm market, palm pricing fundamentals, looking at the main fundamentals that we should always be paying attention to. And if you are a daily trader who look at the market on day-to-day basis, what are the factors that you need to look at and pay attention on daily basis? Third, as I mentioned earlier, I will look at the main factors driving palm prices from Jan to September, followed by main factors to watch out in 2024. So there are about 5 or slightly more than that we need to pay attention in order to understand price movement. So those are the main swing factors, if you like, on CPO futures in the year 2024. And then finally, one slide on conclusion and another on the price outlook. So please bear with me. I will try to speak and take you through these many charts and points here. So overview of the palm market. Malaysia is the second largest producer in the world. Malaysia was the largest producer for many years until year 2009 when Indonesia overtook Malaysia as the largest producer. And as you can see on the red line representing Indonesia, the growth has been exponential, growing rapidly year after year in terms of production. Indonesian production is near about 50 million tons and Malaysia is near 20 million tons. So Indonesia has more than doubled its production compared to Malaysia. We had a small dip in production in the year 2016, which was due to severe El Nino in the year 2015. As you may know by now, El Nino generally brings lower rainfall, drought-like weather, which will have an impact on the yields and therefore on production. So that was a severe El Nino when Malaysian production fell to about 17 million tons from the previous year of 19 million tons and above. We always look and speak about palm market and we look at CPO futures every day. But what is palm? You can see the pictures here, top left, oil palm plantation. So the first thing is, it is not a field crop like soya beans or rapeseed or canola. It is a crop that is planted across a vast area. And it also means that once it's planted, the tree is giving production for more than 25 years. As you can see, the pictures of rows of trees. So this is one issue in Malaysia where many trees are old. Many trees profiles are of mature trees. So that means the yield has passed its peak. The yield has passed its peak. So the pace of replanting is quite slow in Malaysia. Picture of fresh fruit bunch or FFB, and then fruit that is sliced. When it's sliced, this is how it looks like. The mesocarp, which if you press, you get the crude palm oil. And the white flesh here is the endosperm. which is the palm kernel. When it's crushed, you get the palm kernel oil. Okay. So just some information for you. You can read more about it if you like. If you live in Malaysia or Indonesia, you may have seen oil palm plantations as you drive up and down North-South Highway, or as you come into land into Kuala Lumpur International Airport. So point here is that palm oil is a perennial crop, unlike soft oils, which are seasonal crop, which has to be planted, prepared, planted, blooming, and then harvested, and then restart again. Prepare, sow, bloom, harvest. So palm oil is not like that. Once it's planted, after stage 1 and stage 2 nursery, it will give you production for 25, 30 years and so on. Okay, overview, top 5 producers of CPO, crude palm oil. Indonesia leads, as I mentioned earlier. About 60% of global production comes from Indonesia, followed by Malaysia, 24%, and then Thailand at 4% or 3.45 million. So you can imagine ASEAN alone command more than nearly 90% of the global CPO production. However, Indonesia and Malaysia are the two leaders. Okay, Malaysia will never take Indonesia. Indonesia will continue to expand because of its much bigger country. 90% of the production from Indonesia comes from Kalimantan and Sumatra. So the oil palm market production side is a duopoly. It's not a monopoly. It's not an oligopoly. It's not a perfectly competitive market structure, but it's a duopoly. Two main producers commanding large share of the market. So a bit like Pepsi Cola, Coca-Cola, or Boeing and Airbus, Nike and Adidas, something like that. So on the chart on the right shows you the main exporters. Again, it's the same. Indonesia and Malaysia command a huge 87% of the global market share of palm exports. The other point is that Indonesian export about 55% and Malaysia 32%. But most production from Malaysia are exported, whereas most production from Indonesia are consumed domestically. So moving on, users. So who are the main users? Who are the guys that's really using the palm and using them? Indonesia not only is a big producer, but is also a big user on oleochemicals. Oleochemical means chemical that is derived from crude palm kernel oil and used in the production of personal and home care product, like the picture in the middle here. Hand wash, sanitizer, soap, detergent, floor cleaning detergent. All this has some quantity of lauric acid, which comes from crude palm kernel oil. So India is number 2. Most of it are edible oil. So India command about 22% of global palm oil imports. Somebody raised their hand, Joanne. Over on the right side of your screen, global palm oil use. So food is still really makes up a very large portion of the use of palm oil, edible oil particularly, followed by 24% oleochemicals, which is used for personal care and home care, as I described, and then 5% on biodiesel. So biodiesel is the expanding portion of the palm oil market with the increased mandates designated by countries like Brazil, Indonesia, Thailand, and Malaysia. So this is slightly different. They are slightly different to the soya bean oil, where increasingly more and more soya bean oil is used in the biodiesel production. So palm majority is used in edible. Bean oil, which is the closest competitor to palm, more and more bean oil is used in the biodiesel, particularly in the United States. So if you look at the cooking oil in the supermarkets, you will see palm oil pure or palm oil blended with some other oils. So I invite you, if you go to the supermarket, take a look at the ingredients in the cooking oil bottle. Okay, this is the last slide on the overview, second last slide on the review. So every month, the United Nations Food Price Index publishes how is food prices doing globally. And one of the indices is vegetable oil price index. The vegetable oil price index is a basket of vegetable oil prices consisting of palm, bean oil, rapeseed oil, canola, and others. And you can see when the war broke out, vegetable oil prices shot up very rapidly in February of 2022. And then the Black Sea Grain Agreement was signed, which allowed for the shipment of sunflower oil to come out from the Black Sea, and that helped to reduce food price inflation, and prices have been down, led by decrease in the vegetable oil prices. The Black Sea Grain Initiative agreement was not renewed this year. It started July last year, and July this year it did not was not renewed. However, vegetable oil prices did not shoot up. Okay, so just summary here of the overview section of what I was speaking about. Indonesia and Malaysia command 84% of the global market. Palm is the most competitively priced edible oil. It is the cheapest and most widely available. You can read the rest of the points. Somebody raised about EU Renewable Energy Directive, where EU is going to phase out the import of crop-based biodiesel. That is true, but the Malaysian and Indonesian government are working with the EU in order to delay it or appeal through the channel of World Trade Organization. The EU accounts for 10% of global palm oil imports, okay, which is about 7.5 million to 8 million tons. So it's an important market. Okay, so moving on to pricing fundamentals. So this is the second part I wanted to talk about after overview. CPO futures pricing fundamentals. CPO is a futures market. What does it mean? It's a derivative market. That means the price has an underlying value. Okay, there are many futures market like sugar on the in ICE exchange. Coffee is also traded on futures exchange. Rubber on Tokyo Commodity exchange. Soya complex, that means soya beans, soya bean oil, and soya milk traded on the Chicago Board of Trade exchange. And then crude oil, which is the most widely traded futures product, which is traded on NYMEX, New York Commodity Exchange, but also on ICE exchange. But there are also markets where there is no futures. So in order to know the prices, buyers and sellers make an agreement, sign an agreement, and then the deal is done. Okay, like iron ore, bananas, eggs, and many other products. Okay, there is no futures market. So the purpose of futures market is to allow price discovery, but also to allow hedging, speculation, in order to manage your risk and so on. So, for example, if you want to know, hey, what is the CPO price in February of 2024? There is a price, there is a number on the Bursa Malaysia exchange. Okay, so moving on, speaking about pricing fundamentals. So, what are the main fundamentals variable that you need to pay attention if you want to be a serious trader in CPO futures? Number one, supply and demand analysis. Number two, how does related oils do? So you cannot look at palm in isolation. You have to look at palm in relation to other edible oils, soybean oil, rapeseed oil, and sunflower oil. Weather, because it's an agriculture crop, so it's subject to weather vagaries. Policies of government, because it's to do with food. Countries love to secure their food supplies in the interest of food security. And then finally, externals. External means exchange rates, announcements made by government, the movement in ringgit, the movement in crude oil, and so on. But these are the main factors or variables that you need to pay attention if you want to understand the fundamentals of palm oil. Hey, this is for daily pricing people. So if you are looking at CPO futures, is it going to open higher? Is it going to open lower? What is the next trend? How is it looking? How do I understand? You cannot understand the whole economy. You cannot understand the whole palm oil market, but you can understand some parts of it that will help explain the behavior of CPO futures on day-to-day basis. So the first thing, any any traders will look at is related oils. By that I mean soya bean oil on CBOT. How did it do? Did it close high? Did it close low? They will also look at soya bean oil on the Dalian Commodity Exchange. They will also look at palm oil on the Dalian Commodity Exchange. Secondly, how did Malaysia end month stocks do? This is published on monthly basis. But before the real data comes out, we roughly know already how the numbers are going to be. We get indication of production numbers from Malaysian Palm Oil Association, 1 to 20 of the month. There is a number on production change. And then for the full month, again, there is another set of numbers. So these numbers help us to understand the direction of production in that month. Export data is the most widely and most frequently available data. If you don't get it, you can WhatsApp me. I generally distribute this number into my broadcast list, which is about 700 people. So you can also get this data. This data is published by ITS, MSPEC, SGS. Who are they? They are cargo surveyors. They are cargo surveyors. But the actual data, the final data, the data that is reliable, the data that the market should accept finally is Malaysian Palm Oil Board data, which is published on the 10th of every month. Today is 10th of October. So the data was published today at 12:30 p.m. And I will show you in the report what are the main variables you need to focus on. Okay, other daily pricing fundamentals you need to look at are crude oil. How did crude oil do? Crude oil trades in Asia hours even before the CPO futures market opens at 10:30 p.m. So you need to roughly keep an eye. How is crude oil doing at Asia hours? And then policy, taxes, and levy. Indonesia changes its taxes and levy every 2 weeks. So you need to pay an attention. If the tax and levy is going to go up, that means Indonesian products are going to become more expensive. And that means CPO futures may has propensity to go higher. If the tax and levy goes down, Indonesian products are cheaper. Indonesian product is cheaper compared to Malaysia on the export market. That means Malaysian prices tend to go lower. Okay, so let me just speak a little bit more on these. So here are the points I mentioned earlier. I've already hyperlinked these, so you can even click these. These are delayed numbers. You can have a look at it on the website. I think it's 15 minutes delayed. If you want live prices, if you want prices on a day-to-day basis and real time, then you have to subscribe to one of the service providers, information providers. They are listed on Bursa Malaysia website. They are like Bloomberg, Reuters, Morningstar. There are so many providers. You can sign up, you have to pay, you can subscribe. Then you can see all these numbers. How is bean oil doing? How is um, bean oil doing on Dalian? How is ringgit doing against dollar? How is rapeseed oil doing on Zhengzhou Commodity Exchange? How is canola doing in the ICE exchange? Okay. But this behavior will help inform the movement of CPO futures on day-to-day basis. Okay, so this chart proves the point that I was trying to elucidate earlier, which is edible oils prices move in tandem. Okay, they are strongly correlated because they are all fighting for market share. Because they are fighting for market share, if palm goes down, sunflower oil price goes down. If sunflower oil price goes down, it will pull the other prices down. So generally, palm oil, RBD palm oil, the cooking oil, is the cheapest and the most consumed of all the oils in the market. However, in the recent few weeks, we had a problem where sunflower oil became the cheapest or the lowest. And that means sunflower oil is down, it's pulling palm prices lower. Okay. If those prices are together, there is no discount. The market participants, customers globally generally have a bias towards palm oil because they think palm oil is lower quality. If sunflower oil price is $830 and palm oil is also $830, I'll buy sunflower oil. So there's a tendency for people to think like that. It's not true, but that's the way uh, how consumers think. And therefore, when palm loses its discount, loses its competitiveness, the demand or the consumption will fall. Okay. Okay, let's look at the next chart. In the next chart, I show you the futures. So that means I'm comparing CPO futures Bursa Malaysia versus soybean oil futures on CBOT. And you see they are strongly correlated until about August 2022. There is a breakdown. All right, there's a breakdown. One main reason is because the American, who are the second largest producers of soya beans, which you crush and get soybean oil, have increasingly been using soybean oil in the biodiesel market. So palm is used in edible for cooking, eating, whereas bean oil is used in the biodiesel. So because it's more and more are going into biodiesel, they are not correlated. There is no connection anymore. Okay, there is no connection anymore. But I still want to tell you that if you want to see how CPO futures is opening on day-to-day basis, you still need to pay attention to soybean oil behavior on the CBOT market. Okay, here cash prices. I'm showing you the relationship between sunflower oil and palm oil. So this was the point I was trying to make earlier. At some point, sunflower oil reflected by this orange line or gold line became lower very rapidly. You can see palm oil, blue line is quite steady, but sunflower oil dropped very fast. Why? The main reason is because there has been expectation of increased export availability of sunflower oil from the Black Sea. Okay, remember, September, October, November are harvesting season for sunflower in Russia and Ukraine. So there is a bountiful harvest in these two countries, and there are buyers waiting to source the crushed sunflower oil, mainly India. Okay, and this has been the reason why sunflower oil prices is coming down, and consequently palm oil prices are facing the pressure. And here I summarize: sunflower oil prices are declining sharply due to high sunflower oil seed stock in Russia and on resumption of some trades. Remember, I said earlier there is no agreement between Russia, Ukraine, and the United Nations to resume the trade, but there are some trades that's happening from the Black Sea, from the Ukrainian ports. Although many of these ports are damaged badly, there are some stocks there that's going up. So when the market hears these, oh, there is plenty of supply of sunflower oil going to come out, and therefore it's putting pressure on sunflower oil prices. Okay, moving on to data. Okay, so we looked at related oils. Now I want to look at data. MPOB data is the most important data for CPO futures trader. What are the four variables you need to look up? Production, exports, imports, and in-month stocks. And domestic consumption, or some people call it local disappearance, can easily be calculated. So here is the report. This is how it looks. You want to see this report, you can click on the MPOB button there, the letters there. I have hyperlinked it. The data was released today, so you can see the numbers there. Okay? And as I said before the numbers come out, there are expectations, right? Expectations. Reuters will report poll numbers. Bloomberg, we also will say, hey, we think production is going to be like this. So the market will move accordingly before even the data comes out. Month finishes, we roughly know already, hey, stock is going to go very high. Prices are already coming down. Okay. So before the actual data comes out, the market is already priced in these fundamentals. Okay, the most sensitive variable of all these, right? Production, export, the most sensitive, the most consistent variable that has clearly explained the CPO price is Malaysia in month stocks. Okay, and the relationship is very clear, very consistent, very stable. It is a clear inverse relationship. That means when stocks are high, supply is high, prices are down. When stocks are low, prices are up, as you can see from this chart here. So I've used the MPOB monthly stocks, the blue bar, and then the red line is the CPO futures average of the month. I've used CPO futures close for the third month, which is the most active month, because it has the largest liquidity volume. And you can see the behavior is very stable, very constant. Even if you can do, I've just done September 2021 to 2023. You can do 40 years, 50 years, 10 years. The relationship is quite stable. Okay, so this is very well known, and I urge you also to look at it, analyze, and play around with it. Okay, so this chart shows you the relationship between exports and production, right? So, and the black line shows the change. So if you look at January to September 2023, green is the production, red is the export. So you can see our production is much going stronger compared to exports. Exports are down by about 3.4% from January September 2023 compared to January to September 2022. Okay, exports are down 3.4%. But production is almost the same, down by just 0.5%. And there's a big difference, and the difference is about 2.4 million tons. 2.4 million tons. And if you add the stocks from the beginning of the month, that's why our stocks are much larger than what it was last month and few months ago. Okay. And you can also see I put the average for the last 4 years, and production is still below the average 2018. Sorry, not production. Yes, production is below 2018 to 2022. So production has not really recovered significantly since 2020, right? Production has still been low. So it could be impact of COVID, labor shortage still, lower yields, and so on. And I will show you some of these reasons. Okay, so we know stocks are high. We know sunflower oil prices are under pressure because of large harvests coming from Ukraine and Russia. And we also know that exports are not doing so well. So what is prices? How is price behaving? So the red line here showing you the price in 2023. Prices, CPO futures prices has largely been stagnant for most of the year. But compared to last year, we are down about 30%. And price, the next question is, where is the red line going to go in OND, October, November, December? Is it going to come down, or is it going to rebound and cross above the 2022 mark, or is it going to go higher still above the 2021 line? Okay, so I have some forecast numbers which I will present later. Okay, so price behavior from January to September summary: fast declining sunflower oil prices, high palm oil stocks, and good short-term production are depressing palm prices. Palm prices was at 4,000 ringgit on the 1st or 4th of September, the last time. Since then, prices have come down by about 480 ringgit. The question is, will prices go up back to 4,000 ringgit this year? Okay, so I've spoken about 2023. I've spoken about overview. pricing fundamentals. I touched on 2023 pricing. Now I want to speak to you about 2024. What are the main 5 things to look out in understanding the price behavior? So number one is extreme weather. Everybody knows and read and listened to it many times. But what I have seen so far and what I'm hearing now is that El Nino situation is not as bad as many people expected in Malaysia. Although the situation is very different in Indonesia, you can see from the map here, the number of hotspots been increasing in the areas of Kalimantan from July, August, and September. August and September are regular, normal, hot season. But what is different this year is that it started earlier. Even in July, we already seen many hot spots in the area of Kalimantan. It's important because Kalimantan and Sumatra, as I said earlier, make up 90% of the CPO production in Indonesia. Okay, and in Malaysia, as you know, uh, the rains have been better than expected, which has been very positive for yields. And that's why we had a very good production months in July, August, and September. I think October production will be lower. Will be lower. The pace of production increase will be lower. So that means uh, we can expect production between increase of 2% to down to 3-4%. Okay, that's what I think. Because trees cannot consistently have high production. Yields have to rest, so biologically they will come down. Okay, so the current El Nino, if it happens, if it's severe, then we can expect a reduction in yield by 5%. And I foresee production to be down by about 1 million tons. So that's a big cut in 2024. That means we will be facing severe shortage of supply in 2024 should the El Nino spread from Kalimantan to Sabah to Sarawak and to Peninsular Malaysia. Okay, but you must also remember El Nino is only El Nino in the East and Central Pacific is only part of the story. El Nino is hot and dry, generally below average rainfall in Southeast Asia, which is bad for palm growth and yield. However, in the North and South America, it brings adequate above average rainfall, which is positive, which is good for soybean planting and yields. Okay, so while palm production may suffer, we may see bountiful crop of soya beans. And that means soybean oil prices may be putting the pressure on palm oil. Of course, this will happen at different times because soybean planting, harvesting are seasonal, right? It's seasonal. So in America, harvesting is September, October, November. In Brazil, it's slightly earlier, and Argentina is slightly different. And Brazil is a big country, and soybean planting happens in the southern part of the country, in places like Mato Grosso, Paraná, Bahia, and so on. So all these places are far away and will have different dynamics and impact from the weather. So I just want to make this point so that you don't just think that El Nino, low production, palm oil prices high. But remember, there's going to be better crop of other oils. Okay, forecast numbers for production. For now, these are my forecast. I presented these a few weeks ago also, so I'm not changing the numbers. Extreme dry conditions uh, will impact yields and oil extraction rate. Planted area is generally reducing in Malaysia anyway because of increasing conversion of oil palm planted area into housing, development, roads, townships, and so on. Productivity of new workers. So we have a lot of new workers, but they are not from Indonesia. So we were speaking to many plantation owners. Most of these workers are from India, from Nepal, which means they do not have the training yet in order to harvest particularly very tall trees. Remember, I told you earlier, most of the trees in Malaysia are very tall, and that means harvesting, whether it's using sickle, motorized or non-motorized, means you need well-trained workers in order to cut the bunches. There's also been increase in certifications. Malaysian Sustainable Palm Oil, then there is RSPO. Increased scrutiny from government, from agencies, also has meant expanded area has been limited in Malaysia. You can see from this bar chart here, I predict 2023 production to be largely unchanged. So it's not a big change. And production has been flat from 2020 all the way to 2023, decreasing but below the 5-year average. Over in Indonesia, production will also likely to suffer by unchanged number for now, although I was hearing from Pak Fadil Hassan, who is the GAPKI, saying that production in 2024 might be lower than 2023 because of the impact from El Nino. Next slide shows you the production area in Malaysia and Indonesia. Malaysian production oil palm planted area has been decreasing by about 225 hectares, while in Indonesia, the production area been increasing. But this is in the context of two countries for oil palm. But look at this chart here. Oil palm planted area in Indonesia in the red line, Malaysian oil palm planted area in the blue line. They are very flat. The growth is very, very small. In fact, Malaysia is flat, no growth to decrease. Indonesian growth is the pace is very, very small relative to United States and Brazil. Expansion in soya bean planted area. The growth is phenomenal in Brazil. And in the US, the growth has been elevated relative to Indonesia and Malaysia. And this is because there is strong, greater, robust demand for soya bean meal and soya bean oil. So not necessarily for the edible oil part, but mainly for biodiesel and protein for animal feed is resulting in increased planted area for soya beans in Brazil and in the United States. So I just wanted to show you this chart so that you have an understanding. Although Indonesian production area is increasing, but relative to soya beans, there is no way near compared to palm. Okay? Soya bean production area is expanding far, far rapidly. This is like creating another two Malaysias in 1 year. Okay. Okay, sun. So that's so I looked at oil palm. Just want to see. So I'm still looking at main factors to watch. So I looked at weather. I looked at Malaysia and Indonesia production. Now I want to talk to you on soft oil prices. So as I said earlier, soft oil prices are weak. Bean oil is weak. Sunflower oil is weak. They are weak because of bountiful crop, not enough demand in order to uptake the production, and this is putting pressure on palm, and palm is losing market share, particularly in China, but also in the Middle East countries, which traditionally depend on soft oils. Because palm is losing its market share, exports are slow, stocks are high, and this is putting pressure on prices. So major edible oil cash prices will be one of the main determinant of CPO futures prices in 2024. And particularly sunflower oil, I repeat, because according to my colleague who covers sunflower oil in Ukraine, she's based in Ukraine, from September last year to August this year, Ukraine exported 5.6 million metric tons of sunflower oil. So that's 25% more than in the previous season. So although there is no agreement, although there is high security risk, although the insurance for freight is high, Ukraine has defied the global markets by continuing to ship sunflower oil out of the Black Sea. Okay, now I want to talk to you about demand from Malaysia's side. Okay, so this is this part here, number 4. Okay, China import demand. So on import demand, you can see this chart here first. This is year-on-year change. So basically, I'm comparing uh, the month of September 2023 versus September 2022. And then if you go that in reverse, August 2023 versus August 2022, year-on-year comparison. And then the difference is whether it's in surplus or in deficit. And you can see most of the months in 2023 has been in deficit, This is a serious problem because we are coming from a low base in 2022 because of COVID. There was a lot of demand destruction, but demand has not recovered like in pre-COVID years. Okay, demand has not recovered on year-to-date basis. So that is first 9 months, Jan to September. Malaysian exports are down by about 2.44%. I think these numbers need to be updated. If you use MPOB numbers, they are down by 3.5%. Okay, 3.5%. But in Indonesia, exports are doing much, much better. Their exports are up by 12%. Of course, Indonesia is coming from a low base because they banned exports in May last year and then reopened it for export. So a lot of exports went out, but exports are riding high in 2023. I want to show you this chart because a lot of the market share has been grabbed by Indonesia from Malaysia. So that's another reason why Malaysian exports are not doing so well. In particular, RBD palm olein export, which is the most traded palm product, and specifically to China. So exports to China began to improve in 2022, but it's mainly benefited Indonesia. So in this chart, I show you the same thing, year-on-year comparison. So August 2023 compared to August 2022 for Malaysia and Indonesia. And you can see in 2019, Malaysia and Indonesia together exported 7 million tons to China. But now we are way, way below that number at about 4.6 million tons. So can Indonesia and Malaysia make up that 1.4 million tons of exports? And if they can, which country is going to benefit the most? Okay, so it looks like Indonesia has benefited the most by exporting olein, particularly to China in 2023. And that's another reason why Malaysian exports been suffering. So the point here is that another determinant of CPO futures pricing in 2024 is dependent on China import demand. And that means it depends on how well the Chinese economy does. Okay, how well the Chinese economy does. If the Chinese economy continue to be lackluster, a lot of problems with the property market, high youth unemployment, and general slowdown in economy, then we can expect Chinese buying of olein from Malaysia will be very, very slow in the remaining 3 months of this year and into next year. So we have to watch how Malaysian export does in January and February next year, just before the Chinese New Year. Okay, so the other points, so I've done import demand. So I just want to go back here just so that we are together. So I've talked about extreme weather. I've talked about Malaysia and Indonesia production. I've done soft oils. I just spoke about China import demand. And finally, let me say about Indonesia biodiesel, just one chart only. So Indonesia has implemented B35, and that means 35% palm based methyl ester. So it's oil from palm, and then the remaining 65% from regular diesel. So you blend them together, you get biodiesel, and this is what the government calls B35. So B35 is a mandate. That means you must do it. The government has a list of suppliers and blenders, and the government offers subsidies if you are not able to produce in the quantity that the government wants. So Indonesia has implemented this, and what does that mean? That means more and more CPO will be used as a feedstock for the blending of biodiesel. How much? We think it's about 11 to 12 million tons of CPO. And that means 1 million tons taken away from global supply and used for biodiesel in Indonesia. And that also means global supply of CPO availability is going to be very, very tight. So, which other countries can make up the export of CPO? Malaysia and Thailand. These are the two big exporters of CPO, particularly to India, month on month. So, this is another space we have to watch. Indonesia has one of the best biodiesel programs in the world. That means Indonesia has been able to announce, allocate, finance, and implement the biodiesel program from B10 to B20 to B25, B30, and now at B35. And let's say, for example, President Jokowi announces Indonesia will implement B40. Well, that means the prices on the CPO futures will shoot up rapidly by about 400-500 ringgit easily. That means more CPO is used for biodiesel production, leaving Malaysia the only country that is able to supply the global market. Okay, so this is just a summary of the Malaysia supply and demand estimate. So this is my forecast for 2023, where we will be at the end of the year. Okay. We, I predict we will finish at 2 million tons stocks. So now we are above that, 2.3 million. We will come down to 2 million tons by the end of this year, so December. Although the beginning stock relatively is high, 2 million tons considered high. At the start of January, we will be at high beginning stock, but this will fall rapidly to below 2 million tons in the first quarter itself, according to my humble forecast, because February is a low production month. The months are short. There's lots of holidays for Chinese New Year. There is no harvesting activity, limited harvesting activity happening, and there is strong export demand to China. So, a lower production, high export outlook, and seasonally there are more rains in Jan Feb, might cause flooding, which will limit harvesting evacuation activities. So this means we will be below 2 million tons just in the first quarter of 2024. Conclusion: fast declining sunflower oil prices, high palm oil stocks, and good short-term production that we are witnessing now are depressing palm oil prices in the last 4 weeks. But palm prices are poised to recover from seasonal lows because we are now in high crop cycle, and weather will have an impact on the reduction in output. Price outlook, my final slide in the presentation: supply risk, that is the production and weather, and sunflower oil. The pricing dynamics are the two main swing factors for pricing for the rest of this year and into 2024. China and India are sitting on very high stocks at the moment, and the discount of palm or competitiveness of palm to other oil is very narrow, and this is bad because markets, buyers will tend to switch to buying other. In the event of strong El Nino, production will be impacted in the first half of 2024 significantly, but we still are not sure how severe El Nino will be. Early indications are it's quite bad in Indonesia. Whether the atmospheric response will change and bring that unfavorable drought, dry conditions to Sabah, Sarawak, and Peninsula, we are not sure. Palm prices are facing downward pressure, but I think it will see recovery from mid-October. Although some people think prices should go lower still, I think prices should recover. Prices are expected to build on the recovery in the first quarter of next year, forecasting to 4,000 to 4,300 ringgit on the CPO futures active month contract. But high prices will not be sustained very long because then palm will suffer from demand because of competitiveness from other oils. Okay, with that, I end my presentation. Here are all the references you can use to search for the data that I have used and referenced in the presentation. This website simply shows you all the data that's coming up in the month. So you can look at this website at the calendar at your own time and you will know which data is going to be released on which date. Okay, with that, I thank you.
For your informative sharing. I believe many of our audiences here have gained valuable information about what are the 5 catalysts that drive palm oil price movement. Now it's now time for our Q&A session, and we encourage you to participate by asking any question that you may have that are related to today's question. To do so, simply type your questions in the Q&A box. And when you submit your question, please make sure it is sent to all co-hosts to ensure that I can easily locate and address your question. And we are looking forward to hearing from you, so don't hesitate to ask anything that is related to today's topic. Now, for those of you, if you don't have any question, while waiting for your question to come in, if I would like to ask a small favor from you, as you can take a minute of your time to fill up this feedback form, since we have already provided you an informative session today. So it just only takes you less than 1 minute to fill up this feedback form. The link of the feedback form will be provided in the chat box on your site. So you can take your or you can also take your smartphone to scan this QR code. Just take 1 quick minute, let us know your thoughts, comments, as well as your feedback, so that in the near future, we are able to improve further on our site and give you great value contents and learnings to improve your trading. So just take 1 quick minute to fill up this feedback form, and later on, we will continue with the Q&A. Okay, time's up. If you have already submitted your feedback, I appreciate that. Thanks a lot. Well, for those of you who haven't finished yet, you can continue to finish filling up the feedback form. And thanks for your participation in giving us your feedback. We will strive our best in improving the next session. Now let's continue with the Q&A session. And to ensure we have enough time for all participants, we will be selecting and answering the most relevant questions from the Q&A box. And please note that due to time constraints and limitations, we may not be able to answer all of the questions. So let's start with the first question. I see that there is one audience sharing and asking something that is related to synthetic palm oil. Now, Dr. Satya, how does synthetic palm oil play a role in affecting the palm oil price, since there are, a lot of other vegetable oils also in the market?
I didn't speak about these, but I don't think it will have any major impact because the quantity is very small, supply is very small of the synthetic palm and natural palm. Global production of palm is about 80 million, 79.76 million tons CPO. So that's a lot of production, and I think synthetic is not anywhere near to have a major impact on prices. The only area I can see is probably in the oleochemical applications like the personal care and the home care product manufacturing, like I described. Those are high value products, so it may be there, but in the totality, 75% of global palm production is used in the edible oil. Only 24% is in the oleochemicals, and the balance 10% in the 5% in the biodiesel. So I don't see any significant major impact on the use of synthetic palm.
Okay, next question. Something that is related to export, comparing between Indonesia as well as Malaysia. Are there any specific reasons that Indonesia export more palm oil as compared to Malaysia?
Indonesia has a larger scale, bigger ports, so the scale is much bigger. Number one. Number two is Indonesian prices are cheaper generally than Malaysia, about $15 to $20 cheaper for olein, about $10 cheaper for stearin, $10 cheaper for PFAD. So price is the main driver for larger Indonesian export, despite the higher taxes and levy. The levy and tax on palm oil is lower, significantly lower to CPO. And China is a big buyer of palm oil. So just price competitiveness allows Indonesia to export more oil at a cheaper price, despite the taxes and levy to China compared to Malaysia. Malaysia doesn't have any taxes, but the FOB price is $15 to $20 higher compared to Indonesia.
Okay. Moving forward, another question that is also related to the CPO prices. How about US dollar movement? How does that impact or affect FCPO price movement?
Okay, so the exchange rate moves. So generally, what we observe, so the theory is that a weaker ringgit makes CPO cheaper to international buyers with US dollar. And that means a lower ringgit, cheaper to international buyers in US dollars, should stoke a buying interest and raise the prospect of exports. Okay, so that's the understanding. So does the market behave like that? Yes, it does if the ringgit falls significantly, sharply, and quickly. Now the ringgit is very, very weak at about 4.7325, I think, to a dollar. So it's quite weak ringgit. But the weak ringgit is not really attracting buyers to come forward and book CPO, because there are other oils which are trading cheaper, like I described. The bean oil is cheaper, sunflower oil is cheaper. And then the other thing you need to consider is that India is well stocked for the Diwali festival, which is coming up in November 12th. China is well stocked up with soya beans, which they will crush into meal, and the byproduct oil is used for edible. So, so you have to look at this in totality, the context. But if you just look at in isolation, ringgit, CPO, and dollar, a weaker ringgit should push the CPO futures up and vice versa. Stronger ringgit means CPO futures is lower because exports are expensive.
Okay. Earlier on, you mentioned about the main fundamentals that impacts FCPO. Can you summarize what are the key fundamentals that impact the palm oil price movement?
Okay, I just want because I kept saying fundamentals. I just want to say that prices on CPO futures, in any futures market, prices move according to many things, many things. Fundamentals is just one of them. There's also sentiment. There is also technical charting. There is also speculation. There is also, people just whack speculation. I think, hey, everybody's going up. My price is also going up. I also buy. So there are many factors there. I've just put it in a nice category for you. But if you look at fundamentals, the main thing for daily pricing is related palm oil, Malaysian production, Malaysian exports, crude oil behavior, and how the in-month stocks are. So to understand in-month stocks, you have to look at production and export. So production and export numbers are available within the month. So within every 5 days, you can get export numbers. So these are fundamental. Fundamental means you are looking at the data to inform your decision. Speculation means you just whack a position. Technical chart means you draw the chart, there's resistance, support, you draw the chart, and then I'm saying all these are important. You cannot just say fundamentals is important because sometimes prices do not behave according to fundamentals. Why? Because it has already been priced in or it is yet to be priced in. All right. But at the end of the day, all pricing in all futures market come back to fundamentals. If it doesn't come back to fundamental, there's a bubble, there's a bubble brewing. Like for example, even in the property market, somebody said their house is $1 million. Another guy said, no, this is $1.5 million. But the actual transaction, if you see the actual transaction on the paper, is only $800,000, for example. So all the other numbers are just speculation or bubble. You see, so fundamentally, everything has to come back to supply and demand data. And the main thing I want to uh, suggest or answer is that you must look at related oils, you must look at crude oil, you must look at MPOB data, you must look at crude petroleum oil pricing in order to make an assessment how the CPO futures will be good.
Okay. Now, speaking on the fundamentals, as there are many fundamentals that impact the palm oil price, right? So, which are the fundamentals that are actually carry the most significant weight that directly impact the palm oil price?
8 month stocks in Malaysia.
Okay. Now, there is participant asking one of the fundamentals that is about the weather. So, how does El Nino affect the price movement in 2023?
2023.
Yes.
Okay, so I'm not a weather expert. I'm just reading, learning, listening from everybody. So at the start of this year, 2023, at the POC conference, I was there in March in the Shangri-La Hotel. So everybody was saying that El Nino is going to come. Production will be impacted from July, August, September, right? So because they said that, prices were quite high. So prices do not wait until El Nino happens. If El Nino is going to happen, the prices will already react by now. Okay. But El Nino did not make a major impact on production this year in June, July, August. Well, nothing happened. In fact, it's been raining every day. Good rainfall. So production has been good. But now what the weather forecasters are saying is that there will be dry conditions. It is going to happen in October, November, December, January. It's going to be very bad in the next few months. And it will have any. So when we say El Nino means generally El Nino brings dry, low rainfall, and even drought-like condition. This is not good for yields. It's not good for crops, any crops, whether it's tomato, chili, sour paddy, or rubber or oil palm. It's not good for any crops, right? Because of low rainfall, because of low yield, because this will result in low production, generally El Nino years will shoot the prices higher. And that's why during El Nino season, food price inflation goes up. Okay. So my point here is that we can expect uh, poor weather conditions end of this year to have an impact on production next year in the first half of next year. Okay? Yeah.
Okay. Uh, um, um, just now you have already explained pretty well about El Nino because generally most people think about El Nino. It's about a very general sense of
Uh,
um, low rainfall, hot weather, which is very a good thing that you explained and clarified earlier. So I
right.
noticed that just now earlier and in your presentation, you also mentioned about hotspots. So how does El Nino hotspots specifically impact the production for palm oil specifically and maybe other crops?
Crops. Um, so I think so hot spots means the area is receiving higher than usual solar, higher than usual heat. Okay. So this will cause few things. So number one, it will cause forest fires if it's very, very dry weather. Number two, water is needed for the absorption of the nutrients, specifically NPK, nitrogen, potassium, calcium. Okay. So if you fertilize the trees and there is no sufficient rain, the absorption rate will fall, which will result in poorer yields. So this is a bit of a debate. Plantation, some plantations will cut down on fertilizer when during dry season. Some plantation no, trees still need food, so they will still fertilize it. But if they fertilize and the rain comes, that's when they get the booming, bountiful production. Okay, so there will be tendency for smallholders. So you have to think of smallholders. Not everybody, not all are big plantations with millions of spare cash to buy fertilizer and keep. So after this war broke out, Israel Hamas, fertilizer prices have shot up because Israel is one of the big players in the fertilizer market, together with Belarus and Russia. And Belarus and Russia are countries under sanction. So fertilizer prices have gone up now. Smallholders may not be able to secure fertilizers. And then they are thinking, what's the point of putting fertilizer? It's dry weather. So you have a serious problem of production next year because there's a lag, right? There's a lag impact. So depending on the severity of El Nino, sometimes it's 6 months. The last El Nino we had was in 2015. The production was bad for the whole of 2016. The whole year was bad production. So it can be 1 year too, right? So this is the main thing about El Nino. And Kalimantan is a big producer. There are many big players there, especially in Kalimantan Barat. But there are also small players, small holders in the area of Kalimantan. So high fertilizer cost, lower application, lower rainfall, absorption rates down, yields are down, production is down. Then we have a problem if the government insists on implementing higher biodiesel mandates.
Okay. And I see there's another question that is related to one of the fundamental, which is about the policies, which is the EUDR, European Union Deforestation Regulation. How does this impact the palm oil producers when
Mm.
this has been, when the regulation gets even stricter?
Okay, so this is the Malaysian Palm Oil Council, MPOC. So they're doing a lot of work. I mean, I listened to some of their presentations. They are doing a lot of good work, meeting the European institution officials, explaining to them why it's not a good idea. What the European Union wants to do is to make sure all the products, there are six main products, palm is one of them, cattle, coffee, cocoa, soybeans, all the products that's coming into EU must go through due diligence. And it should prove that this product is produced without causing deforestation. Okay, so there's a due diligence that the EU is coming up with. But Malaysia oil palm plantations, 99% are certified by Malaysian Sustainable Palm Oil. So why don't they use the MSPO principles and criteria in the due diligence? So there's a negotiation going on, but looks like the EU wants something else. If the EU does not agree, what does that mean? That means Malaysia will lose export of about 2.5 million tons of palm products to the EU. So if it loses, who else can take these 2.5 million tons? Are there any markets? Yes, there will be markets. ASEAN is a big market. I mean, you may not make as much money by selling to the EU, but there will be other markets that can absorb that excess supply. Said that, there is going to be a huge reputational damage to palm if the EU completely cuts off exports of palm from Malaysia and Indonesia. So palm oil will just have a bad reputation. Right? Um, but generally, I think the EU has not realized how difficult it is to undertake the due diligence of the products that is made from palm going into EU. And I mean, there are thousands and millions of different types of products. And there's also debate, how do you verify? Is it one time or is it each time the shipment comes, or this product comes from this plantation? So the good thing is Malaysian government is very positive. They are very enthusiastic. They think it's also, they have good data sets in order to support the exports of palm without deforestation. Yeah.
Okay, so it seems like Malaysia authorities has make a lot of good effort in terms of promoting palm oil. Okay, so just now was about EUDR, and there's another question that is also, I think, related to the perspective about the world perspective about the palm oil, whether is it palm oil healthier or unhealthy compared to other vegetable oils. So can you help us clear or clarify about this misconception?
Okay, so I'm not a scientist, so I'm not going to lie. I do not know. Um, Palm generally have there's a lot of negative publicity around it. Some with agenda, some because of some interest. Uh, I think consumption of any edible oil in excess is bad for health. All consumption, food, whether it's oil or non-oil, should be moderate. Uh, Palm oil does not show any significant impact on health to the extent where it's completely banned. I mean, palm is used not just in food, but it's also used in lipsticks, in hand wash, in detergents, in sanitizer. Palm was the savior during the COVID because there was a lot of lauric acid that was used in making soap, sanitizer, hand wash, and so on. So palm has got wonderful, manifold aspects that contributes to the betterment of the world. So I don't think one or two publicity or papers um, show justice to the wonder of palm oil. If it's really, really bad, I mean, many countries would have stopped the exports of it, but palm is exported to almost 80% of the countries on the planet Earth.
Okay, I think it's quite about time. We are going to take a couple few more questions. One of the things that that you mentioned that impacts palm oil would be the palm oil biodiesel. How about when the palm oil biodiesel growth? How does this? What would be the potential impact on CPO price?
Okay, that's a good question. I think more higher mandates, so the requirement by government to blend more and more biodiesel means more CPU is used in making biodiesel. So that means the supply is going to be very, very tight. Indonesia exports about 2 to 2.5 million tons of palm products every month. Can you imagine if you take away 1 million from there? I mean, that's going to be a significant impact on the CPO supply in the global market. In Malaysia, Malaysia also has a biodiesel program. So the biodiesel program, in fact, at the moment is supporting CPO prices. If Malaysia says there's no more B20, we will cancel it. And Indonesia says we are also canceling B35. I think palm prices will fall from 3,600 now all the way down to about easily to about 2,000 or even lower, right? So biodiesel mandates are supporting palm prices. Any higher mandate will push prices even higher because more will be used in biodiesel. But this also raises the problem or the debate on biodiesel versus food versus fuel, because more and more is used, with more and more palm um, product is used in fuel, food prices will be higher. Food prices will just go up. So which is not so good for food price inflation, but it's good for the environment because you can cut your emission by using more biodiesel compared to 100% combustion fuel. So that's the way I see biodiesel. So some countries have scaled back. Thailand, for example, they were on B5, B7, B10, and then they came back down to B7, and they've just said that they will not upgrade it because there's just not enough sufficient supply in the market. Instead, they're exporting CPO to India. Brazil is going to upgrade, but the biggest area in which you are going to see more upgrades of biodiesel is the EU. The EU is going to upgrade their renewable fuel consumption targets. But the question is, where is the feedstock going to come from? If they're going to cut down on palm biodiesel, so far the data shows used cooking oil is the biggest increase in exports from Malaysia and Indonesia to the EU because it's used as a feedstock for biodiesel. Okay? So these are some dynamics. I mean, there's a lot more I can tell. Neste in Singapore is a big buyer of used cooking oil because they are uh, big producers of biodiesel and biofuel for jets. So there's a big story there.
Okay, I see it's about time. Thank you for your participation and engagement. We appreciate each and every one of you. And allow me to wrap up today's webinar session. As I've shared with you previously, this is LLF Let's Learn Futures webinar series. It's a series of topics where we will be conducting every Tuesday evening, same time from 8:30 p.m. until 10 p.m. There are lots of content-packed and informative topics where you will learn some practical knowledge about futures trading from our experienced and expert speakers. If you would like to join any session, you can scan this QR code and register the topics that you would like to attend. Once you scan the QR code, you will come to this page and there will be an event calendar. So if you would like to join the upcoming sessions, you can find the LLF webinar topics on Tuesday column. You can click on it and register yourself. Similarly, if you want to understand the futures market and how to trade the futures market in detail, then this online workshop is definitely right for you, because today's webinar is only brief to introduce you about the futures market. If you're still very new to the futures market, or if you are considering uh, or even thinking of trading futures, I highly recommend you to join this online workshop right now, because this LRF online workshop is very different from a webinar. It's a step-by-step workshop where we will be guiding you how to kickstart to create your first futures contract. So you can pick your phone up right now, take this picture and screenshot this page, and register yourself right after this webinar ends. It's only for those who are serious in starting your futures trading, because each and every session we will be limiting to the first 50 online attendees only. So remember to register yourself in both workshop and book yourself a seat. You can also find the LLF online workshop in our event calendar as well. The online workshop would be on Saturday. There's a website from Bursa Malaysia called Bursa Marketplace. Inside, you can register yourself for a risk-free trading experience where you can do paper trading in a trading platform. It's called the Derivatives Trading Simulator. You can do paper trading, and you can also familiarize yourself in futures trading. So give it a try, test it out so that you can learn and begin to develop interest to further your futures trading. Before we end this session, let me introduce you to this Bursa Academy, as this Bursa Academy is a comprehensive one-stop e-learning platform where you can get all the information and knowledge about stocks, futures, and any other products that you can trade in Bursa Malaysia. You can scan this QR code on your right here, or you can Google search Bursa Academy. Make sure you're able to find this link, and you can access Bursa Academy for more information. All right, this comes to the end of our session for today. Thank you, Dr. Satya, for sharing with us an informative session. And thank you all for joining us today. We hope you found this webinar informative and engaging. I believe you have learned lots of informative knowledge and broadened your perspective about the palm oil, uh, the catalyst that impacts and affect palm oil price movement. So with that, I'm CY. I will see you next time. Good night and goodbye.